My name is Kathleen van Heu from EastDPM, and I attended this morning a very interesting session about financial inclusivity. And could you tell us a little bit more who you work for and what actually CGAP stands for, and how you think donors can play a role in this financial inclusivity?
Sure. Thank you, Kathleen. So I work for CGAP, and we are a global think tank pushing the frontiers of financial inclusion, focusing on a market development approach. All of us share a mission of promoting and advancing financial inclusion for all. And one of the very interesting innovations that we see out there is the mobile financial services. So using new technologies to actually get out to reach people that otherwise have not had the access to financial services. So banking the unbanked. And this is something that, of course, is of keen interest to many of our members, donors that are interested to support that. I do believe that public funding can actually play a catalytic role in pushing the frontiers and pushing the private sector to areas and new spaces where otherwise it might not go, or not with the kind of products that we're looking for to serve unbanked people. There's a couple of things that funders should keep in mind, though, while doing that. First of all, of course, the market condition itself, the characteristics of the market, but also the stage in development. We see some markets that have already picked up on this mobile financial services, like Kenya, the big example for everyone, but other markets are not there yet. The other thing that funders need to take into consideration is their own strategy and capacity to be active and engaged in this area. So whatever they will do will have to be aligned with their own strategy, and it's critically important to have in-house expertise to do this well. And for those funders that may not have the level of expertise that's required, it may be useful for them to work through market facilitators that are on the ground, have good market intelligence, and have the capacity to interact with the multiple stakeholders that are engaged in this world of mobile financial services that range from the regulator to the mobile network operators to the banks, agent networks, and the clients themselves. So there's quite a lot of variety in the relationships in that context. And the third point to keep in mind is really the availability of private funding. As we all know, public funding needs to be catalytic, needs to be used in the smartest way, therefore trying to crowd in private capital and not crowd out, and be very purposeful and very much focused on the final outcome that we'd like to achieve, which would not happen without public funding.
Thank you, Antonique. I think that was very clear. There's basically preconditions that you outlined for donors to actually get involved in this innovative financial means of actually reaching out to those who don't have access to finance. But if indeed these preconditions of knowing your market, knowing what your capacity and your strategy is, and making sure you don't crowd out, when you actually have met these three preconditions, what is it concretely then a donor can potentially and usefully do in this very innovative way of giving access to finance to those who, the unbanked, I think is what you call them.
Right. Well, donors obviously have a range of tools to themselves. They have knowledge, they have relationships, they have resources in different forms and instruments. What we tend to see is that the best purpose in most markets, and again, it of course does depend on the maturity of the mobile financial services market, but in most markets, it's actually most appropriate for public funders to interact and to support at the industry level, so that whatever they do, whatever they provide in terms of assistance actually benefits all the industry players. And so one of the very obvious places to start in the mobile financial services world is around regulatory reform, so helping central banks and regulators to get the right enabling environment at the regulatory level to create a level playing field for all partners to engage, and really to help those frameworks to be both open enough for innovation, but also balanced enough so that they promote the stability of the or ensure the stability of the financial system and ensure protection of clients. Now, I should say again, this is one of those examples where, as a funder, if you do want to get engaged in this, it's only appropriate for those funders that already have relationships with central banks, that have the necessary capacity and expertise on regulatory reform, of course. So it really requires some specialization, I would say. way. So that's one area at the industry level. And specifically in more nascent markets. In more developed markets like Kenya, for instance, you could engage with the government, even beyond the regulatory framework, you could engage with the government to try and encourage them to channel more of their own payments, for instance, cash transfers, welfare programs, through the mobile financial services network, reducing the cost for the government and reducing leakages, but also ensuring that those clients that are on the other end and receiving the cash transfers are closer to the financial system and hopefully will also get financially included. And for the industry, the benefit is that this increases the volume of transactions, which in the end is also making the economics work much, much better. So that's at the industry level one part. The other part I would highlight is really generating public goods. This is still a relatively new area where we see a lot of unknowns yet. What's the right business model? How do we develop the right products so that people actually do get the right services in their hands? How do we improve customer uptake to get people from being registered clients to actually clients that are transacting and using more services? So a lot of work can still be done in research, market research, and putting that to the disposal of market actors that then can take it forward and do something with it is another area where I think public funding can be very useful at this point in time. The last area I would say is really funding with grant support, for instance, or other instruments, the branches banking operations themselves. I would say, however, that you need to put a lot of care in doing that. This involves obviously subsidies, and as other areas of development, these subsidies need to be smartly invested, making sure that they don't crowd out, but actually crowd in the private sector, that they are performance-based and very much focused on the challenges that are faced by customers. So rather than the back end technology and large sums of money into that, really your grant support should go towards the front end and well measured towards the outcome that you as a funder would like to achieve.